Alright, welcome to my channel, and if you have been following, you will notice that we had this markup since the other week, that this is the range we are expecting the market to come and close, which the market eventually came and closed. So now what next we'll be looking for is the next range that we will be working with, and you have to know something. If you have been following, you will know exactly how to draw these ranges. And right now, the range which we might be working with is this. And this. Right? So this should be the range that we should be working with. If you look, you found out the market was creating this. So actually, the market should be going in that direction based on the confluences that are in place. So if you note where the market turned from this place from last week, you found out that it took this low, shifted the structure to the upside, and then left another block, which the market came and respected it because all of the body of the wick closed above it. So this is the candle of the other block, and which you see the market came and created a structural shift from that point. So this is to tell us that the market will likely be going up. So look at it, it came and bounced up this point. So this is actually significant. So we have all the chances of thinking that the market might go up, right? So this is the daily time frame, and today, as we know, is the beginning of the week, which is Monday. So what we'll be looking out for is we'll be focusing on this place and then seeing if we will be at the right side of the probability, right? So but yet, you can see the market has shifted the structure to the downside from this place, which it has took a high and then came down, took this low, shifted, retraced, and came down. Right, it came down and then now it's shifting. So if this other block, this place, is going to hold, then the market will push to the upside. But if it's not going to hold, the market will trace back to this other block here and then continue to push down. But nevertheless, we always trade what we see, not what we think. So let's drop down to fold our time frame, because as we know, as we see, we have our markings in place, right? So that is from the weekly markup, from this high to this low. But if we come down to daily, this is the range which we will be working with in the daily time frame, right? So now let's go down to lower time frames and see more confluences. So if you can see, the market is obviously resuming to the upside from that point of interest, which was the other block as we marked. So you see the market obviously took this low, which we had a denotation here. The market is all about patience. It's all about patience. So if you actually wait and see clearly your structures, then you push the button towards the direction of the market. Yes, chart can be messy, just like this one today. You see the 4 hours candles are not actually expanding, they are consolidating to the upside. So it's It's not bad. We don't complain to the market. We just trade what we see that the market is giving, not just what we think the market or what we hope. We're not trading in hoping. Right, so this from the 4 hour time frame, this was the low that the market took also, and has closed the range. Yeah, you see, it closed the range. Immediately the market open up, right? So my network is kind of good. So this is, you see, this was the range which the market took. But then, as we know, when the market came and took this range, before it came and took the range, we had a low, this is a double low taken, this low and this other low that the market took before going to the upside and then shift a structure here, right? So this, when you go to lower time frames, I mostly go from 4 directly to 15, because when I have marked, I will actually know what I am looking for. So you see, this point here is very, very important. Mark this point, and this one too is very important. You see, market came and respected it. Is a breaker block. This one too was another block, but yet market violated it, so it's a breaker block right now. So, and also here we have another one, other block. So these are potential places that the market might come and tap into it and continue to go, but we won't be using this because the market came and touched them with its wicks. So this should be a bunch of liquidities that the market might be coming to work with to wipe them down. If it's going to the upside, it will come and wipe them down. They wipe them down and then push to the upside, or it will come, wipe everything down and then push to the upside or go down. So actually we will be only reacting to the market when the market prints the structures or the shapes we see that we're interested in based on our strategy, right? Remember, it is always this. For a reversal pattern, it is always this. It should be always this. Vice versa, or this. So sometimes it creates a mini low before even the break of structure. So still, it's still trying to induce you. So that is it. So always put these structures at the back of your mind, that this is actually what the market is doing for. So you see, if you see, based on the structures we have here, the market came and do what we were looking for. Let's just use this place, right? So you see, the market came, took it, and then did the first pullback, went up. So what we'll be expecting is to come below it and then push to the upside if we are waiting for bullish market. So this is what we'll be waiting for the market to do. So we'll be responding only when the market gives us what we are taught and what we see based on the knowledge we have about the market. So this is your inducement, and then when we go down to lower time frames, I don't know, yeah, this is obviously this is the low that the market will come and might reference and go to the upside. So actually nobody knows what the market would do precisely. We always analyze in probability and based on the previous data. So if we're inside of the probability, fine and good. If we're not, still fine and good. We will eventually be. So this is it for now. I so much more believe you have an insight on the directional bias that the market might be given. That is given. I mean, so for this condition, if it's bullish, it's okay, it will hold. If it's not, you see, if you find out that I have, this is the high I am talking about, and the reason of the high is actually this. If you check in this one, so we had this low taken, and then we have this structure shift here, and we have this structure shift here, and then we had our first pullback, and then if you can see we have another block here. So my point of interest should be this other block, right, for the market to turn from. So this is it. If the market will go down from that, and then my stop loss should be above that. So this is where my point of interest should be at. So this is it. It's pretty simple. So this is my inducement based on this. You see, structure shift, pullback there, and then this one didn't go above it, so it's still an inducement. It's inducing us. So if it come here, it creates a structure shift, then I place my sell, right? I might either use an aggressive entry or wait for confirmation at that level, but this is what I might be looking out for in the market. So this is pretty easy and simple actually to pull out. But to respect yourself, there is something else. So this is a close this is not for today, but this is it. The market is actually doing what it has to do, and we are doing what we see the market doing, and we react to it. It's all about patience, guys. It's pretty simple when you absorb patience. It's pretty quite less stressing if you apply more patience to your trading. Alright, I guess it's very clear. The chart is very clear. Even if you go to, you see, this is, you see something. This is also when it came. This is it. It came. It took this, and the reason why I marked this place is just pretty simple. You see the markups are there. This is the inducement. This is an inducement too that I am expecting the market to come and push above it. So here too, when you go lower, you find out that the market came and pushed from that place. So let's go to 5 minutes time frame. 5 minutes. Let's see why. Yeah, so this is another block as well. So the market came and took away this high and then continued to go down. So that's what the market did. So at the same time, it produced a confirmation, which is always the same thing. So you see, this should be the place. That's if the market is, I'm not picking this trade. That's if the market is going to go down at that moment. So this is what we might be expecting. So it's pretty simple. So but you see at the same time, you see it produced this as a shift structure to the upside. It produced an inducement, and then market came and took the inducement, now going up. So we'll see which one will hold the order, but I'm pretty sure based on the structure producing, the market might sorry, I just got a message. So the market might just continue to push to the upside because of this. So you see, shift the structure, so it might just go to the upside and return to this place, right? So as I said, you shouldn't be afraid of failing or hitting stop loss in the market, which I am. So it's actually simple. So catch up to the next one. Please like, share, subscribe, and stay tuned for next market breakdown. Your responses will be helpful, and I'll be making videos based on more requests in the market to see what you see. I had a trade set up on gold here, and I execute based on the strategy, and yet it failed, right? So did it, you see, structure shift here, it came back, you see, it came back and bought from here. So this structure shift too, I waited for the market, I pushed the button, and then it failed. It's still okay. So as long as you have your risk management intact, so it's very simple. It's very simple. Eventually it will happen tomorrow. So but yet where the market pushed from, I had the setup in place before it happened. So you see, I had the setup, so that's it. It came and referenced the exact point, and that is absolutely great. So no editing, nothing. It's just how it was. So you see, right? It's pretty simple. It has a bunch of, so it broke that structure. It has its own inducement, went up, broke the structure, inducement, bought a structure, inducement, bought. You see, that's how it is. Then boom, it came and tapped that inducement, and then broke a structure here. So what we will be waiting for, I actually thought the market will continue to push up to the upside, but yet it has to do what it has to do, right? So that's it. It is what it is. All right, so stay disciplined, stay consistent, stay patient. It will work out definitely. Not necessarily right now, but eventually. So just look at consistent way of execution. It's just consistent. That is how it is. That's how you get to the top. That's how you grind. You keep grinding until you see the results. And thank you very much. Stay blessed.